Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not an investment advice. So this video is another binary options trading, price action trading, and the Bollinger Band strategy and binary options strategy. Yes, where I'm going to show you how to apply those kind of concepts which I have explained in my ebook. Get this ebook, you'll find the link in the description. All those kind of trades which I'm doing are based on those kind of concepts which I have explained in my ebook. Market condition, trend identification, rejection, and candlestick mass, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook, you'll find the link in the description, and in the description you will find also the link to the Facebook group. Those concepts here are those ones which I'm using each and every time when I'm trading. Yes, you should know most of them inside out. Yes, completely. You have to get them in your blood. Yes, and you should be able to trade those kind of concepts blindly. Yes, if you see a chart, you should understand what is in front of you, to understand market direction and so on, to do the right decisions. Yes, so let me see if I can now show you. I will not cover those kind of things which I have covered in the last videos, where I have shown you those kind which are the most important concepts. Yes, because I think those one who already have seen my older videos do understand that the most important are always the same. Those one about support and resistance, that is how to spot a trade here, for example. Then this kind of concepts where I have explained what kind of candlestick pattern are showing you support and resistance. The support and resistance in general here, that is, for example, is really easy. Yes. That you know that the upper wick, the top or the low, high of the upper wick, yes, is a resistance. The low of the lower wick is a support level, and that can be applied to any kind of candlestick. Then the difference between a major and a minor support and resistance level, what change of polarity means, what overall a market condition is. Yes, so that price moves up, do ranging, moves up, or do moves up, do ranging, and then goes down, and also vice versa, down ranging up or down ranging down. Yes, that is how market is moving. Then all those kind of trading setups which should be also known, but more also more the concepts, not the candlestick pattern or trading setup itself. Yes, you should be flexible. You should try to apply those kind of concepts which I have explained in the ebook to your trading. Yes, the stuff about the EMAs, what those kind of alignment of EMA means, what this kind of market condition are, and obviously candlestick mathematics. Yes, to understand the overall trend. Chart pattern are also important, and last but not least, what the EMA and the Bollinger Band are telling you here. This one here, yes, you are using Bollinger Band, so know what they mean. You are using EMAs, so understand what they mean. Yes, because you are using them, or else remove them from your chart, then you have a much clearer chart. Yes, if you don't need them, but if you are using them, you should understand what it means. And that is not only for the EMAs the case, for every kind of indicator, because I see so often traders who are using indicators and they never look at them. Yes, they do their trades based on what, I don't know what about what, yes, but not about the indicator which they are using. They are using them only to feel cool. Yes, I don't know why, but I see often screenshots of trades where I see a lot of indicator, and they indicator are telling you no, don't enter in this trade. Yes, and then there coming the question why I lost. Yes, you lost because you don't give about the indicator which you are using. Yes, and you are not giving any kind of price action, and that is the reason why you at the end will lose. Yes, because price will go against you, because you are not listening to that what market is telling you, because you are so stubborn to do and believing that things that market will do the moves regarding your decision. Yes, so you are so focused, that you think that market will do that what you expect that market will to do, yes, because you want to be right. So okay, that was this one. And let's start. Yes, we have weekend. I cannot do any kind of live trading because I'm a European trader. I do not have available the OTC market, and so I'm doing this kind of discussion of those kind of trades which I have already done on the aspect that I will show you them in the ebook, which kind of pages are related to them, because it's interesting and nice that you know those kind of concepts, but important is today that you don't know everything from in them. You have not to know the complete ebook inside out. Yes, you need only to know where it is in the ebook so that you can get back if you see this kind of trading, yes, that you understand, okay, that is there, yes, I have seen this sometimes, or I have seen this kind of concept, and then you will memorize them from alone by practicing, yes, and recording and remembering that you have used this kind of pattern, this kind of concept, this kind of candlestick pattern, and that is what it's about. Yes, I cannot how can I say, I cannot program your brain to know them. You have to do this on your own, like you have learned the simple addition and multiplication and the subtraction on the mathematics. Yes, that is the same thing. Yes, you or like you have learned to read. Yes, first of all you saw only the letters, then you tried to do some symbols, and after you know the symbols, you have done the words. Yes, and that is the same. You try to spot those kind of concepts while you do practicing. Without practicing, you will never reach this level. Yes, you need to practice, and then you have to remember those kind of concepts, and earlier you do this, better it is. So okay, that was this. So let me start here. I have prepared this kind of video, and as soon there will happen, yes, here I have to explain you first of all, because I have to enter. I entered here immediately into this trade because before it was the kind of intro which I'm doing always. Yes, and here you see I entered exactly what on those kind of things which I have explained in the ebook, how to trade the engulfing candle. Yes, we have here almost ranging market, ranging here, everything is flat. Yes, so we have here a lot of support and resistance level, and here we have this kind of engulfing candle which is creating here exactly on this kind of support and resistance level. This candle, this engulfing candle broke this. We got a nice rejection here from the one deviation, and on the rejection from this previous candle opening price, yes, here this level, on the rejection I entered into a put exactly on this level because I knew that price can be, yes, in this case, so that price, that the next candle could be a bullish one, yes, if you don't have a good entry point. Yes, I have explained this kind of concept also, where you do have to enter. We have here a bearish engulfing candle. Let me show you what I mean exactly. So first of all, the engulfing candle I don't show you because I have shown you this engulfing candle, how to trade this on the previous video. Yes, I will cover them again, but I'm talking about this one here. Yes, bearish engulfing candle. Let me see. Yes, bearish engulfing candle with a pin bar here, pin bar like candle, and then this is showing selling pressure. We have here ranging market. Yes, it looks like we are ranging around the 50 EMA with a pullback of the 100 EMA. That could be that we are going here soon into an uptrend. That is what this kind of scenario is telling me. And let me see if I can show you now the concept here, what I'm meaning here. Engulfing candle, you should try to enter at this level of the previous candle opening price. Yes, this is the area if you want to go in the direction down. Yes, I want to go down because this candle is showing selling pressure. We have here also some kind of trend line again. Yes, trend line strategy trading here, and you see here that is a trend line. Here is this kind of engulfing candle, and I'm entering exactly here at this level of the previous candle opening price. Yes, to get this as support and resistance. So, and that is it already. So let me put a little bit forward to don't waste too much time. And you see, this candle here is showing that yes, Yes, what is this showing? That we have here a nice retracement of this upcoming downtrend based on the small but good uptrend. Yes, we got here a nice pullback from the 20 EMA on similar to the 20 EMA. It could be also some kind of, I would say 15 EMA or something. And that was the reason why I entered then into a call. Yes, because of this pullback. And this is what I have explained also in the ebook. Let me show you this. In this kind of ranging market, you don't go into a continuation. I have shown you this in some other example. Let me show you this. Engulfing candle. Yes, here I have done this one. Yes, here this was, but the wrong one. Yes, it's more likely. So you see here engulfing candle, and then it will continue to going down after a strong uptrend. Yes, you get this kind of scenario. You can expect that the downtrend will continue. But if you are in ranging market, this will not happen like this. In ranging market, you have almost some kind of scenario here. And this, for example, let me show you this. These two candles are nothing else than a bullish, yes, opening price. This is a bearish, inverted bearish hammer, yes, a shooting star, yes, but the uptrend is here too strong, and that's the reason why this will not work. Let me show you this bearish shooting star, yes, and after bearish shooting star you get this kind of candle. That means here bearish shooting star here, inverted, this is an inverted bullish, but it could be also an inverted bearish hammer. Yes, but it's not this. Yes, this is one here. Inverted bearish hammer. You have here inverted bearish hammer or a shooting star. Then you get a weak candle, and then you can expect that price will go up. That is exactly this. If you are doing candlestick math, let me show you this, because somebody asked me how you can derive this kind of thing. This is a doji here. Yes, this is a doji of this candle, and this is a real body. Yes, this is a real body, so you have here something what looks like a hammer. Yes, and that is exactly this kind of scenario. Yes, you have this kind of hammer here on the uptrend. Then you get this kind of candle which is not getting down further, yes, which is not showing you that the shooting star will work out, yes, because you get this kind of reversal candlestick which is showing that the uptrend will continue, yes, and then you enter into a call, yes, because it's a weak candle. If it would be a strong candle anyway, yes, you could have done a put, yes, if this would go down, because we are here in ranging market, but in this case it was a pullback, and that's the reason why I entered here into a call. So let me put it forward. So we will, yes, we got, so we will don't lose too much time. So, and then I entering here into a put, yes, because that is what I have explained often when I talk to, if you have a top, something like this here in this kind of ranging market. This is a trade range here, yes, let me show you this. This is a trade range now here, because you see here this kind of wick, this kind of area, yes, here where I have done the support level, and here we have another one, yes, this is a trade range. Here we have a fake breakout in form of yes, a morning star, a pullback from the 50 EMA, and this trade range is showing me here that we have here another level, yes, and that's the reason why I'm entering here into a put, because this candle, the problem is, if you get two inverted bullish hammer, one after another, that is mostly a sign that price will reverse. Yes, don't wait into a continuation after you get two or three inverted bullish hammer without any kind of confidence that there is no support and resistance in between. If there is support and resistance in between, and price will get a rejection from any key level like the 1 deviation, 2 deviation EMAs, then you got not into a trend continuation. You can go in a trend continuation after the first inverted bullish hammer, but never after the second or the third, yes, because that is a trap. Mostly you will be trapped if you enter into the second or the third inverted bullish hammer in a row, yes, because this is why how market will trap those one who are not experienced, yes. So and that's the reason why I'm entering here into a put. After price broke through this area, I entered into a put, expecting here a double top. Yes, that is what you should have always in mind, that if this second top is not reaching the closing price of the second top is not reaching the first top, then you have always in mind that there will be a double top forming and overall in ranging market, yes. And that is what I was expecting here, and so I'm entering here into a put, yes, and you see price is going down and stopped exactly on the neckline, yes, and you see now we have what? Exactly, we have here a double top, yes, a double top at the second top, we have a bearish engulfing candle at the second top of this double top, yes, at the neckline, and that is a clear sign for a trend continuation against this neckline, yes. And that is the reason why I would have done here most probably a put, yes, because of this double top in form of engulfing candle. That is a confluence, and so I prepared to do a put because I understood that price will most probably going down. I waited to enter here, and that is what I have explained here. Let me show you this so I can show you this kind of referring here. So support and resistance. Yes, we have here support and resistance, and where you should enter on a downtrend in support and resistance, exactly above the support level. Here, this one. Above the support level, you enter if you are doing a put, and you enter below the resistance level if you enter into a call. Yes, we have here support level, yes, and you enter above the support level if you will enter a put, and that is what I have done here. Look here, we were here below this level, yes, we were below, and I waited exactly till we got above this level to enter into this put, yes, because so I have this small margin of safety. We have here this wick of this engulfing candle, the previous opening price, which is giving also support and resistance, so I was not expecting that price would retrace back higher, and so I had to get in this kind of trade exactly on this level. So let me put it a little bit forward to make this more clear to you. So, and you see price is moving there, and you see how close this in the money was, yes, only because yes, it would be most probably out of the money if I would have entered earlier, yes, because of this small range here and this support and resistance level, yes, because like I have explained often, yes, that price will, yes, after an engulfing candle, the next candle has not to be always a bullish one, a bearish one, and not always have to be a strong bearish one. So it's important that you get the most highest probably entry point above this level. And then we are getting here in, most probably, because then is again this kind of scenario which is often happening, that then the trend continuation will start, yes, because we broke through this area, yes, and this was only a retracement of this upcoming downtrend, and that is the reason why I will most probably entering here into a put. Yes, because I understood that the downtrend will start. The entry point was a little bit late, to be honest. I would have entered most probably here at this level. That would have been better. Yes, but at the end, it's a double top. And then you can do this kind of things because you can expect then some kind of huge, huge victory candle. Important here is that what I have explained here, yes, because we have a strong downtrend. Yes, we have here also this kind of thing here, yes, but that what I want to show you is this one here, engulfing candle, yes, engulfing candle, weak candle, trend continuation, yes, after uptrend, engulfing candle, weak candle, continuation, yes, that is what you have to understand. That is why it's so important to know the market condition. That is why you should understand what the EMAs are telling you. This kind of doji was only created because there is a 20 EMA, and if you didn't see the 20 EMA, you don't know that this is there, and that is the reason why you get on naked chart so often tricked and trapped, and no one can say that is not true. That is a reality, and that is the reason why I'm using the EMAs, because price is reacting. Nobody can say that price is not reacting. They are self-fulfilling. Yes, that is like a Fibonacci level, that is like support and resistance, that is like trend line, that is support and resistance, and price reacts at support and resistance, and that is why I'm using EMAs, Bollinger Band, yes, that are the only one where price react on them, and and that is why this kind of technique is working. Yes, so okay, that was already again. I hope I have cleared some doubts about those kind of concepts, because I got so many questions about this. So I would say, if you like this video, do a like. If you didn't subscribe, subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.